2021 was a record-shattering year for public offerings. Between direct listings, IPOs, and SPACs, we saw some enormous companies raise billions of dollars in the public markets. In today's video, we are going to break down the 13 most valuable companies that hit the public markets this year and cover some of the ones that just missed the cut. Stay with us. 2021 saw a staggering march of private companies into public markets. There were so many companies that were so big going public that there's a whole list of companies that are pretty shocking that you're probably familiar with that weren't even on it. Ginkgo Bioworks raised $1.5 billion to be valued at $15 billion in a SPAC. They were joined by Marqeta, Affirm, Freshworks, GitLab, and Qualtrics, all being valued in the 10-figure range. Crazy.
Crazy. We also have Oatly, Bumble, and Squarespace on that list. I was kind of shocked to see Oatly sneak its way in there because I don't know if you saw the memes circulating once they went public. If you're familiar with their Super Bowl commercial, Wow, No Cow, it was wow, no profits.
No profits and not necessarily health benefits considering you're drinking vegetable oil, aka toxic sludge. All of those companies were overshadowed by our top 13, which starts with Toast.
Toast was valued at $20 billion. They are down 45% since their IPO. Not a super strong showing for a company that brands itself as a point-of-sale solution for restaurants across the country. They make it very easy for restaurants to post their menus online. Customers can order directly on the platform and then pick it up or have the food delivered. It really has offered an interesting solution to restaurant owners, but they haven't had that strong of a showing.
Number 12 has had a much stronger performance since hitting the public markets. Lucid Motors went public via a SPAC that valued the company at $24 billion. They're up 60% since that public offering, now valued over $60 billion, and are riding the wave of excitement for electric vehicles. Not only was 2021 a strong year for Tesla, but another company went public in the EV space that you'll see later in this video. Coming in at number 11 is another company that saw a rise since their public offering. Global Foundries raised $2.5 billion in one of the biggest raises of the year during their IPO, which valued the company at $25 billion. As one of the few companies in the world with a fully built out foundry for creating semiconductor chips, they find demand for their product to be sky high and demand for their stock to be equally hot. Coming in at number 10 is Applovin with a $28.6 billion valuation when they raised $2 billion during their IPO. The company is up more than 35% since their public offering on the back of the idea that a company that started as an advertising network and analytics platform for game developers can successfully pivot into being a game publisher itself. Pretty simple concept. If you know how to sell games, why not make them and make even more profit when you get people to sign up?
Makes sense to me. Coming in at number 9 is Roblox, who was valued at $30 billion in their direct listing. Equity holders sold over $8 billion worth of shares, and yet Roblox is still up 40% since their direct listing. The game developer has captured the hearts, minds, and attention
And wallets
of youths and teenagers across the world, and they're leaning extremely hard into the narrative of the metaverse that is popping up quite often recently, which is a great thing for early investors and probably something that we're going to continue to see happening in 2022. Coming in at number 8 is Robinhood, who was valued at $32 billion for their IPO, and they raised just over $2 billion. They've had a pretty significant drop since then, down 49%, and you've seen Robinhood all over the headlines in 2021. There was a ton of controversy over their platform, stopping trades at one point during the whole Diamond Hands and GameStop debacle. But essentially, Robinhood is a commission-free trading platform where you can trade stocks, crypto, and ETFs. Robinhood really was one of the more entertaining IPO stories I think we covered this year.
And not strong performance, I feel bad because that's probably, of all the calls that we made on the actual rundown, one of the ones I got the most wrong. because I think that in most instances, markets underestimate brand equity. I don't think that it's easy for spreadsheet readers to price something like that. But in the short to medium term, I don't think that the upward trajectory that our economy is in will continue perpetually. And I do think that they will be disproportionately affected by an extended economic slump if that were to occur in the short term.
Yeah, that is true. Oh, wow. Way to own up to that one.
Coming in at number 7 is Uipath, which was valued at $35 billion when they hit the public markets. They're also down a gut punch 40%. Their software helps workers in large organizations save time by applying automation and plugging into the APIs of all their disparate enterprise software solutions, making teams significantly more efficient. A better performance for the equity in 2022. Coming in at number 6 is Grab, which raised $4.5 billion in one of the largest SPACs of the year, valuing the Southeast Asia ride-hailing and food delivery service at $40 billion. Since going public, they are down 10% in an overall market sell-off on technology names. The company is aiming to be a super app, which puts them in a relatively rare corner of the market with some of the biggest technology platforms on the planet.
They are down 10% since going public with their SPAC, but it did just happen on December 2nd, and I feel like there might be time to turn it around.
Number 5 is also a company that went public recently, is down a little bit, but I'm particularly bullish on Nubank. Nubank raised $2.6 billion in an IPO that valued the company at $41 billion. The neobank, which is competing with the largest banks in South America, originates in Brazil and also serves customers in Mexico and Colombia. They take a technologically progressive approach to serving their clients with mobile banking and all sorts of amenities, and have a crazy LTV on everyone that joins their platform. If they continue to get referrals and build on their existing suite of services, I would expect them to have a pretty strong 2022.
Bold call here.
Credit to me. Number 4 is an IPO from early in the year, Coupang. They were valued at $60 billion and have seen their equity take a 42% haircut since going public. The South Korea-based delivery network, offering both ride-hailing services and last-mile delivery for a wide range of retail offerings, is down substantially, but they raised $4.5 billion in that IPO, so they have plenty of cash on the balance sheet to see themselves through a bit of a rough patch.
Coming in at number 3 is Rivian. Rivian went public at a $66.5 billion valuation, and they raised almost $12 billion in their IPO. Their equity has been flat since then. In the video that we covered the Rivian IPO, we talked a lot about the extremely large order of electric vehicles from Amazon that they placed with Rivian. They have delivered on not too much of that order.
Basically none.
But we'll see. Rivian is one of the more exciting IPOs that I think that we covered along with Robinhood. There's so much going on in the electric vehicle space and the self-driving space, and especially with the Jeff Bezos and Amazon narrative to go along with that, I keep my eye on Rivian.
Raised the most money of any IPO this year.
Very true.
Coming in at number 2 is Didi, which was valued at $73 billion and raised $4.4 billion in their public offering earlier in 2021. The Chinese ride-hailing service is the largest Chinese IPO of the year and had the biggest fall of any company in our top 13. They're down 57% since going public in a year in which the CCP saw substantial crackdowns on tech companies around the Chinese economy. I wouldn't expect any Chinese companies to surpass the raise that Didi had here in 2021, as both US investing climates have started to sour on Chinese companies, and the CCP has ordered a number of Chinese technology firms that weren't blacklisted to come back to the Eastern Hemisphere for their public offerings.
And the most valuable company to go public in 2021 is Coinbase. They were valued at $86 billion when they went public via their direct listing and are currently down 28%.
It was a big year for cryptos across the board, and the largest US exchange for cryptocurrencies, Coinbase, which has been around since the early 2010s, was primed to finally take advantage in the sale of their own equity. The winners included founder Brian Armstrong, all the early employees, and the investors that saw this opportunity early, like venture capital firm Andreessen Horowitz. Overall, 2021 was an enormously hot year for public offerings. All sorts of companies found healthy valuations and receptive investors when they decided to go public. We will continue to cover those companies that decide to do so in 2022 here on this channel. If you had an IPO that was a particularly strong performer for you as an investor this year, let us know in the comments and let us know which company you're most excited to see go public next year.